Good morning. Let's get going. Okay. All right. So things look great. Markets continue to push up here. They haven't reached the top. They stalled over here yesterday in the morning, pulled back a little bit, which put into question whether it was going to pull back, and they regained their footing and pushed higher. I think that was, right, I guess around here yesterday, I think, right? Oh, no, had to be here where it started to pull back. Anyway, when I look at the 60-minute, especially on the 24-hour time frame, it gets a little fuzzy for me. So concerns. Well, and for intraday point of view, yes, we do have a wide range bar. Let's expand this a little bit here. All right. So here we had some wide range bar, the 180 reversal, the wide range bar igniting, and controlled up days. This one had tried to make a dip, and yesterday, the buying got a little exciting. Buyers got excited, whereas right into the close in the last 10 minutes, it was like, well, we have to look at the spiders maybe since this is 24 hours, but we can scroll back here. They made a dash into the closer. Buyers like, oh, it's not going to pull back. We have to get in. And then we got this wide range bar there. That's not the end of the day, right? It was right here, right? That bottoming tail bar. That was the move if you were willing to trade in the last few minutes of the day there. And so it pushed up and extended the range on the day, nicely, right into the close. And here was like the, midday move and then the sideways consolidation. This is what we call creating support and then getting that little attempt to move down, the fake news, so to speak, where that was a red candle, but that red candle melted into a green bottoming tail, which I love when they take out the low like that and reverse. But again, it was late in the day. So now we've got this wide range bar. A lot of times after wide range bar, after a few bars up, you stall and you get a narrow range. Maybe it just, if it pushes up again today like that into this high, I suspect, well, what often happens is, well, you get maybe a gap up on a Friday, which is a short, because it's a novice type of gap. But we've got the whole day ahead of us to see how this unfolds. And right now, it pulled back. Let's go back to the 60, and it's pulled in here a little bit, somewhat similar to what it did yesterday morning. And then we saw some selling into around 10 o'clock, and then things made the new low reversal, and then things took off. It was a little after that. So Qs are actually down here a little bit. So this is normal, so it's a bit different, right? In that when we look at price movement that goes higher, it can slow down in momentum, which is perfectly fine. And what you really want to happen in anticipation of a pullback, meaning here you got a wide range bar igniting. It pushes up and the range contracts, pushes up and the range contracts. Here at the high, there was an attempt to go down and it went right back up again. So looking at the candle bodies, you see that they're contracting. Yesterday was a little bigger. And when I say it's normal and what you want is because you get, right, what we're looking for is a, let's say, normal type of a pullback, like this, and then it begins to turn and goes higher again, right? Versus a move higher where prices expand in range, which suggests a short-term end to the move. Now, this could suggest a short-term end to the move, but it happens where there's a hesitancy to continue to buy. You know, you hear the saying, the market climbs a wall of worry. Well, you know, as this market's going up, it got really excited. It's, wow, here's finally the break, right? There were the wiggles over here that we all sat through and still anticipating the market was going to go up. And then it took off and came up into this resistance. And along the way, part of my comments were, odds are the Qs take out the high before they start to pull back. So now they've taken out the high. And this kind of a pattern typically does pull back, but we'll see if today's the day or whether it just consolidates. But as I said, getting a narrowing of ranges rather than a push up where the ranges expand, kind of like this is the opposite of it here. Right? As it starts to go down, the ranges expand, and you know it just displays a overwhelming burst of emotion. In this case, throwing in the towel versus an overwhelming amount of greed and jumping into the markets after it's already been going up for several days. And we'll see how that unfolds. The Dow started to play catch up yesterday, right? I said that is likely what the Dow would do. And I wrote in Monday's commentary, I wasn't interested in buying the Dow because it was a sloppier pattern. I'd rather have focused on other markets rather than this. But this did well yesterday and pushed up, and now it's up above the high, and it's played the catch up. So now, what are you going to do? Does it accelerate here? Is it going to go straight up to the next reference point of support or resistance, I should say? Let's extend that. Okay. So that would give us our next reference point, and it's an area. Always look at it as an area. Doesn't have to be exact, and say, why am I putting the line there? I'm just kind of eyeballing wherever there was a close there. So as it comes into there or just above there, we then suspect that prices would pull back. So yesterday, the Dow had its catch-up day. It took out the high, so giving confirmation to the other two futures markets. The transports are still trying to get off the mat here. They're holding up relatively well, really messy. So we'll need to see if they can get through that area. And we'll just set an alert on that. See if you can get up there. And again, to be, totally bullish. They don't have any hesitancy. Oh, this market's lagging, the transports, Dow theory, yada, yada, yada. Okay. Market's going up. We're making money. And it's one point of view. Who cares? And the other part is, let it join the party and everything go up together. And that would open up the door to a larger move up into that void. And that's what we want to see. Bonds still inching lower. Some utilities have gotten smashed, and don't usually look at utilities, but some of these moves, because of the violent moves in interest rates, there would have been some good trades there, but woulda, coulda, shoulda. Anyway, other things that are moving. Oil just consolidating here after being down, hasn't been able to bounce. Two bottoming tail bars. Can it bounce today, or is it going to start the next move here? Oh, we shall see. Keeping an eye on that. If it starts lower, some of the oil stocks have already gotten a little beat up. It's okay, but in question. And gold here is, again, same story, kind of grinding up into resistance there within a downtrend. Kind of looks like what's called a bear flag. And so bear flags kind of, just, I don't want that one. They grind their way higher, like a higher high, higher low, up into an area of resistance, and then they roll back down. So we'll see if they can kind of get some legs and come up here. Well, we'll see. Then maybe we got something to consider here with gold. But right now, there's much cleaner patterns around than to be messing around with something like this. And the IBB yesterday, we took a position. I did right near the close as it started to pull back a little bit. And it's kind of whatever, doing nothing. But I would, of course, I would hope it just shoots right up, but it's okay. This is a nice pattern. It got shook out on this day on the news. I forget what stock it was that gapped down tremendously, and it pulled this lower, and then buyers stepped up again. And we can't assume that it's going to turn around, because that's a pretty big move on that one bar. But now it shook it off. It's repaired the damage. We've got a wide range bar up. So I'm looking for this to move up from here. We'll see what happens. And what else here? You can take a look at some of these other ETFs. This is shaping up. Right? This got one on the watch list actually for lower over here, and it turned out to be a shakeout. So now I'm keeping an eye on this to see that it can, and so far it is, consolidating at this resistance area, acting really well. We got a bottoming tail bar yesterday. So we'll see, if this can continue. So probably next week. I'm not, looking to jump into this until it consolidates a little bit more or can push above that high. But that's looking good. And, interest rates coming down, or that's helping that. And Dan's going to cover some stocks of interest, but look at this. This is some of the craziness that's going on. Look at this gap up from things started a move at around $1.50, goes up to $4.50. It's now trading up at around $6. I don't know. Kind of maybe a short, but obviously this is it's one of those bios, so not really what I look for or want to get interested in, but it could be a short. This LRCX could be short bait, I like to call it, because it hasn't participated, and the semis have done well, technology's done well, so something's wrong over here with this one. So this is, I've been looking at that, thinking it would play catch up and get through this area, and now it's gapping down here today. So definitely something wrong. And what else here? GE. I'm still thinking this thing can go down. It's been holding here, and it just could be one, easy shorting opportunities in this intraday. It's very, very liquid, and it could start picking up the momentum. So I've been keeping an eye on that. When the market is in a bullish, in this kind of very bullish tone, it's tough even for, what's doing poorly to go down a lot. But so I'm just keeping an eye on that. This 5, this is it's excessive, right? 95. This could be a fader. 3 days up, it reports, and now up close to 100, which is a giant number to get through after gapping higher like this. So I'll be watching that one too. And this is a blast from the past. The penny stock people will be on this one today, probably, since it's active. I guess that's it, Dan. I'll let you take it. You got more of the gappers on your list there and open positions to cover.
All right. Good morning. Yeah. I remember that one too. The old Mankind.
Yeah.
The internet days. I don't even know what he does, but
it's a biotech.
Wow. Didn't remember that. All righty. So let's take a glance at our open positions. And I'm not going to go, just like yesterday, I have a lot of gaps to go through, so I'm not going to go through them all. I'm just looking for problem children. And just so you know, I just posted an alert here for selling a put spread on Boeing for next Friday. This looks great. We had one that I think we closed yesterday for a few pennies, and we'll do it again for next week. It looks great. RCL, we have a call spread. It's up 7 cents. Roku down a dime. Dropbox flat. IBB, we did it to the close, a put spread. Intel, we're long stock actually, and I'm watching this to add another put spread because our puts, we had 2 different put spreads that expired last Friday, worthless. Intuit is fine, Grub is fine. IWM, we have a covered call. Zen gapping down 69 cents. Well, there's no volume there, and it's fine. LOGM is flat. We have a covered put, so we're short stock and short the put, which is the opposite of a covered call. WWE, we have a half lot. This is Greg's shack that he gave in this room. DE, we're not in, but I'm watching it. Q's, we have some puts that expire Friday. This DBN call spread held from yesterday, you know, that big gap against us. And Greg's ITB, yeah, this would be a great, you know, if there's any juice. It looks like a no-brainer, sloshy, just calling a bottom. So I'll take a look at the juice on that when it opens up. All right, so that's it there. Let's look at all these gappers I have. Let's start up here. So LRCX, Greg showed you, but yeah, this is going to be a, you know, for me, a definite bear call spread candidate. Look at that. So 207.50. I'll be watching that. Oh, also on RTN open position, I just wanted to mention that we still have the iron condor. Here, let me show you the whole trade just so you can see how we managed it. And this one worked just absolutely textbook. Meaning we started off with a bear call credit spread. And it was actually on this gap down day. So on February 22nd. And then that was it was a no-brainer, bear call credit spread. We sat through a lot of pain, but didn't get stopped out. The very next day on this strength, we sold a bull put credit spread. And well, actually, I see the date there. It was the next day rather. And our maximum gain is the sum of the 2 credits, so $1.42. And we could close it now at 81 cents. So we're profitable now. Whereas we would not have been profitable had we not made that adjustment. So there you go, Greg. There's another video for you to make. Goldman Sachs still is ugly, but, you know, made a new low. And here's, you know, what Greg calls, you know, you don't need oscillators. You can tell that this made a newer low, but it's not as great as the low that this made from this one. So that means you're going to get a divergence in whatever oscillator you're looking at. And it's very sloppy, but it's in an area where it's trying to stabilize. It's gapping up, you know, $1.62 from this. If there's any juice, it might be a put spread candidate. Here's one that I might have to add to my dance card. Never heard of it. AABA. Hey, good morning, John. Let's see, gapping up 72 cents. Nothing to do now. The ideal entry was there to sell a put spread. REVG. Remember we looked at this one yesterday that I saw going by on the ticker. And, you know, another bottoming pattern. You can't get bullish on one bar. And look what's happening. It's getting creamed again. Down $3.80. I think I looked it up earlier. I think it's a retail stock. Fizzler had a nice bottoming tail on volume yesterday, but it's gapping down again. You know, for a day trade, this afternoon breakout was your entry. But for a climactic buy setup, it's over a prior day's high, so it didn't trigger. And it's still not ready. I don't know what's going on in the solar land over there. All right, 5, Greg mentioned. I have this on my watch for a bear call credit spread. Why? It's earnings, volatility's high, depending on the pattern at the open. I'm going to sell an out of the money call spread that expires tomorrow. Look, this is gapping up $14.50. I don't know what percent that is, but it's off the charts. Look at the monthly there, 81 bucks. I mean, think about that. I would love to talk to the people who are buying the stock at these levels. It's like, why are you buying it now? I'm genuinely curious. Why are you buying it after a whatever percent gap up and run from the low 70s? I don't get it, but that's what creates opportunity for us. Oh, Twilio. Look at that pro gap. 18%. That's nuts. Who buys? And then, you know, what would the percent be from the prior pivot low in the 70s? We sure missed this one. And this is supposed to be in my dance card. But I don't remember looking at him in a while. So I'm putting him back in my dance card. TWO. Tell me, hey, remember the gazelle? Is it a gazelle or a leopard? What is a gazelle? Let's stick with leopard. Tell me, on these 4 charts of mine, what jumped out like a leopard to me? Tell me. Hello? Wow. What moron buys after 32% up in a week or two? It's just nuts. All right, I'm not moving on until you all answer the question. The leopard question. And well, I'll take something away. It's not a gapping play, even though that's what brought my eye to it originally, but there's nothing there. Wow, did you all stay out late last night? All right, let me help you here. Does that help? Look at this. Shakeout, volume, wide range green bar, higher low, consolidating tight, ascending triangle. And, you know, I don't care about ascending triangle, but what that means is that the lows are getting tighter. So that's bullish. Major support from last March, or 2 years ago, rather, that's 16. So I'm going to be watching this. This is the leopard that jumped out at me. I'm like, wow, that's a nice weekly chart. All right, CONN. And I looked this up earlier. I forget what sector it's in, but I did look. Wow, look at this bearish. That was a, so, you know, the leopard question, that just jumped out at me. Bullish wide range bar there. I mean, I wouldn't have done anything with it because of the mess there. But look at that pro gap, topping tail. The entry could have been under that day's low. Wow, look at this volume on the, this was the next day. That's strange. So this pro gap day is this green volume. But look what happened the next day. People woke up and said, oh my God, what's going on? But now it's gapping up to 32 bucks. Now it's gapping way the heck up here, back into this gap area. Absolutely nothing to do with it, but you know, it's a gap thing. Smuckers is getting smuckered, 99 bucks. Look, you can see my 100 here, monthly. But you know, that's a big gap down. It is a nasty downtrend, but I'll keep an eye on it just like we did in the old days, meaning a few weeks ago. Remember PM and BMY? I was watching for multiple weeks for a bottoming pattern. So I'll do the same with SJM, see where buyers step up for a put spread. Look at this BMY. What jumps out at me here? I'll give you a hint, the daily chart. This could be the start of a shakeout. Look, it made a new low, pick up in volume, green bar, took out the high of that. This is a put spread candidate on BMY. Let me put that in a different thing here. All right, we're almost done. This is gapping down $5.40. That's just a nasty gap. I don't know what they do. AGN, it's biotech, 159.50. You know, it's a bull. It's not, again, it's not a pro gap, but it's a bullish gap. That would be a put spread candidate, but you know, bios. Kellogg down. Oh, I like the monthly. Look at that. 1, 2, 3, 4, 5, 6 red bars, major support. Still on a downtrend on the daily and weekly, but it's gapping down. If this were gapping up over this prior pivot, you know, 102.69, then it would definitely be a put candidate. But right now there's nothing. It's gapping to 93.80, which is a big percent. So that's a bearish gap, not a pro one, but a bearish one. Why is it not pro? Because it's not igniting a new move. It's already in a downtrend. All right, Greg, what were some of the Dow stocks we said that might be primed? CAT was one. A deer I was watching 2 days ago and missed it yesterday. The UNH still looks fantastic. Let's watch that for a new play. And you know, that's the one I meant to make it official, but it triggered right at noon and I missed it. So that I take blame for that. Cost. Yeah, I put cost in here. Look. Oh shoot, I'm not done yet. Yeah. Thanks. All right, let's go through these real quick too. Yeah, I'll put cost in a. Put cost in a little minder here. All right, let me go through the rest of these. Yeah, I thought I was done. So I'll go quicker now. And then we'll come back to them in 30 minutes, unless there's a tier one. Bullish gap, but that's a biotech. INBK, bearish gap, but it's sloppy. Brazil's getting hit more. Look at it's, you know, we can watch that. Look how far Brazil's getting from its declining moving averages. Wow, look at this gap up, AV. Now that's a pro gap, but it's an untradeable one. Qualcomm I like. Look at Qualcomm, but the problem with trading him is he's in the middle of all this, you know, buyout stuff. But there's room to go. That could be a put spread candidate depending on how it sets up. Look at this. This was all pre-market here. These dotted lines. Look at this beautiful close yesterday. And then it just ripped as if the market were still open. That's just a breakout. Cost, yeah, we'll watch it. Looks like a great put spread candidate. I like the monthly and weekly also. So yes, that cost is a tier 1, depending on how it sets up. This looks like wow. I don't know what the heck happened here, but I don't like the way it trades. It looks like volume. MDB, never heard of this stock. Fairly new issue. ACIA. I think we were looking at that one yesterday, even with the little small gap up. NXPI. Wow, I don't like the way that trades. It's an ADR. He's going. ZS. I'm going to have to add this to my dance card. Look, another recent IPO. Look, the leopard. Look, I want you all thinking like a leopard. What jumps out at you? This was breaking down to all-time lows. And it took 3 bars and then wide range igniting. On this wide range igniting, that would have been a put spread candidate.
Anybody that's in Shack, put a stop under the low of the day.
Mountain. Oh my God, that's bullish. Nothing to do now, but I'm putting this in my dance card. All right, let me take a look at opens. LRCX, that's tier 1. I'll do it right now if there's juice. See, 3 minutes, because of this bearish pre-market action, and now it's wide range breakdown. This is a go after 3 minutes, provided there's juice. So what did we say, the 207.50s for next week? Wow, 5 cents by 35. So there's no option trade unless you wanted to, you know, trade the stock. Unless we went way the heck out to July. And there are no 207.50s, but hey, the 210s, if they are very juicy. This is a trade if there's no earnings. Let me look. And the Gardner's outside, so if you hear his blower, that's what that is. LRCX, July 24, we're good. All right, I got us a trade here, folks. Wow, this is so darn juicy. We could, and again, you can pick the strike you want, but the 215, 225 is 75 cents. You know, it doesn't meet our 10%, but it's 7.5%, and the cushion is massive. I'm going to try 80 cents, 5 cents price improvement, didn't get filled. So now I'm going to lower it. $78 didn't get filled. 76 didn't get filled. So see, I'm chasing it a little bit here. The Qs on a 10-minute chart are negating yesterday afternoon's breakout. So that's a sign of a short-term top also. Come on, get me filled. Oh, I did get filled. All right. Sanjay, I'm the one I did is the 215, but you can go 220, you can go 210, you can do whichever one you want. Wow, that was a tier 1 no-brainer trade. Beautiful, beautiful. I did LRCX July 215, 225 for 74. CAVM, beautiful. Sanjay, look at you. On a pullback, I love it. It's relative strength. So on a pullback, beautiful. All right, Costco still bobbing around, but no rush because of the market. LRCX, what a nice trade there, you all. All right, let's look at them 5. This looks shaping up to be a 30-minute low. Let's check out the juice department. We would sell the 100s, but on the monthly, that's a look at the weekly and monthly charts. That is a big bar. But it's juicy as can be. It's spready, but the 100s are 110 by 160. $0.90. July. John, see there, July? Here, let me post it in here and shoot. They aren't going to get filled now, darn it. See, that's the benefit of the green room. I couldn't get this trade out quick enough.
You know, Dan, I think that rather than trying to send it out in an email, what you can do a follow-up as things calm down. We just have to let people know that first thing in the first 30 minutes, it'll just be a text message. And then you can document it later on the site.
All right. Yeah, I just sent an alert. I'm saying don't chase it. But yeah, anything, when we're in high trading mode, yeah, anything to make it more efficient.
The advantage of the text message. Just people need to know that it's going to be that way in the first 30 minutes, and it's just a copy and paste.
Agree. And if they don't want the trades, then, or if they do want them, they better sign up for Telegram. I sold some puts on Tesla yesterday, but I didn't, I didn't post it, make it official. But that one's working. AZO, not bad. What's his brother? AAP. Wow, remember here? Look at that beautiful setup. And I've been watching this ever since that 2-bar reversal. And I know I was like, well, it's spready and this and that. But yeah, I like daily, weekly, monthly. All right, Costco, I'm watching. It's doing nothing. Our Roku's coming in kind of hard. Ooh, I don't like that. Well, I'm still up on the position. You know what? So here's a question for you all. Do we just keep the stop and let it play out? Do I take my small profit because it shouldn't have done this? What do you all think? Move, stop, break even. All right, good, John. At a profit though, right? Because I have open profit on mine. All right, cool. All right, so I'm for them. Yeah, we sold it for 80. So that's the alert I'm going to give. I'm just going to say the retracing big, so move, stop, break even.
QTX, you want to put spread? That was one of the ones from yesterday.
All right, let me just post this real quick. Oh yeah, I forgot about BA, darn it. Okay, yeah, let me look at that. Let me just get this Roku posted real quick. Yeah, and did you notice on Boeing, because it was a little extended, I purposely said, try to get the closing price as opposed to just saying, hey, midpoint, whatever. So it would have to pull in to get filled. So that was a perfect strategy. And it's whippy, but yeah, it's a put spread and it looks fine. So we're doing the 357. And you can go lower if you want. $357, $347, 72 cents. Yeah, there's your 75. There you go. Yep. So that's a perfect example of. All right. So yeah, I got filled. I actually got filled more on LRCX, so that little small bounce, I got filled. XOM, let me look. I'm going to keep muting this because of the, can you all hear my gardener? Yeah, beautiful. Yeah, I got filled on something else there. So look, $80 put. If I were to drill down to an hourly, you're going to see major support at 80 bucks. So how far out do you want to go? There's no juice for 8 days. Greg loves selling 43-day expirations. The 80.75 for July is 60 cents. You know, it's up to you holding an oil stock that long, but I like it. Wow, I had, you know what, I've told you all this, and I got to get in the habit of doing it right out of the gate. I do it during trade management. I say, hey, here's current midpoint, go ahead and bid this to close it. But I put out a bid as soon as I entered Tesla put spread yesterday. I put a bid in for 80% of max profit, good till cancel, and it just got filled. So I've made 80% of my gain here in a couple hours, well, less than 1 hour of trading, because I did it on this afternoon breakout. And it's only 9:47 now. So, nice. Let's look at some more opens now. Let's look at the fangs. Tesla's the best fang today. Our Hyatt Hotel here, covered calls doing great. Apple's relative strength. I mean, if this can go sideways, it might be a new directional next week. But the problem is the Qs are getting tired. Google, that's very bullish, shallow retracement. We're going to have to keep him on our watch list for another put spread for next week. Facebook, we actually closed our put spread into strength. Amazon, still strong, shallow retracement. Bitcoin, just to take a look, it broke out of that base. I wish there were options on this GBTC, and I don't know why. I mean, Bitcoin is the new toy for everybody, so give us some options to trade. This DE is, you know, we missed the entry, darn it.
Dan, WDC.
Yep. I think we looked the other day, even yesterday, so we could do the 87.5. No juice for 1 week. Let's try 2 weeks. The 88.90 is only 21 cents. Not enough juice. What was the other Dow stock you mentioned a few minutes ago when I was
UTX?
Okay. Yeah. Looks great. Another laggard, but that's okay. I'm watching the CAVM on a pullback. Spider's back to the high. Look at that. After that little morning scare of the Qs. All right, UTX, if we go out. 2 weeks, we can do the 125. 120 is 52 cents. But that's 15 days to expiration, which doesn't seem bad. There's 125 strike.
Shorting 5 below 69.70 with a stop above the high of the day.
It's 5-minute chart. Back to my 15. The 100, 105 is 85 cents. That expires tomorrow. If I go out 2 weeks, too spreading, way too spreading. Now it's 90 cents, but it's actually holding fairly well from this morning strength. Wow. I hope our RCL doesn't turn out to be a breakdown failure. It was a no-brainer entry, but I don't like yesterday's engulfing bar, but I'm sitting in it because of this wall of resistance, and our strike is way the heck up here at 110.